Let's practice some strategic profit model calculations. After considering your competitive environment, you are convinced that moving to an online presence will enable you to better meet customer needs. However, you've benchmarked other companies and you are certain that your transportation costs will go up. In fact, you estimate that because you will have to subsidize delivery costs, your overall transportation will go up by about 15%. So what is the impact on your firm's return on assets? Let's return to the strategic profit model. You may have noticed that as we filled out the strategic profit model the first time, we always wrote our numbers above the diagonal. Now that we've made changes in the way we conduct business that are going to change the numbers, let's write our new numbers below the diagonal. This will help us make side-by-side comparisons. You'll see these numbers appear in red if costs go up, or green if costs go down. Let's focus first on the margin side of the strategic profit model. Only logistics expenses change. Transportation costs go from $714 million to $821 million. That's 714 times 1.15. That increases your total logistics cost to $1,521 million and your total operating expenses to $3,819 million. However, because income is reduced, so is your tax bill. Your accountants tell you that taxes will go down by $29 million from $480 million to $451 million. This makes your interest and taxes $460 million. Adding interest and taxes to your total operating costs of $3,819 million gives you total expenses of $4,279 million, which you subtract from gross profit. Higher expenses reduce net income to $622 million, lowering your profit margin to 6.28%. Now let's look at the asset side of the model. There is no indication that you will be increasing any fixed or current asset investments, so the asset side of the model is unchanged. The bottom line, moving to an online presence increases your transportation costs, which reduce profit margin and return on assets. Clearly, nobody's going to be happy with this outcome, especially senior management. You need to figure out how to offset the higher transportation costs driven by the decision to build an internet presence. You have two options. You can figure out how to increase sales, or you can reduce costs someplace else.